Good morning. Welcome to today's speaker webinar, where we're going to be pulling sustainability and accounting apart. And actually, sustainability, it really makes me think, if I go back to maybe 2018, 2019, when the kind of days of people starting to become aware of digital technologies, particularly in accountancy, data analytics, the emerging use of artificial intelligence. And I remember back in those days, people thinking, is this going to be a thing? And obviously, it's become a bit of a thing when you can't, the stuff even in recent weeks around artificial intelligence, almost at a geopolitical level, where you see, it's becoming almost I don't know, is it the next nuclear arms race, AI, in terms of what America are investing, what China are doing, what the EU are doing? So, definitely digital technologies, data, AI are definitely a thing and definitely a big part of the accountancy profession. Makes me think about sustainability today, because I think sustainability for me is perhaps the next wave of change in, society and the world generally, but particularly in the accountancy sector. And I'm already seeing quite a wide range of, levels of engagement and adoption. I know there are some firms who are already commercializing products around sustainability. Some who are actually almost building their firm models around sustainability. And then others, and I go to lunches with clients sometimes, and others who are basically saying, not really on our radar yet. We've not really given it a huge amount of thought. So I think there's a really wide range of levels of adoption, just like we saw a few years ago with digital data and AI. So I think we're going to see a real journey in the next few years as employers, as firms, as governments, as economies really embrace sustainability. And so we're going to be thinking a little bit about how sustainability is already affecting accountancy. And I have got a crack lineup of expert speakers today, and very much with an international flavour, actually, because we've got a speaker from Amsterdam, we've got a speaker who is currently in Portugal, and one who's as far afield as Sydney. So we've got a speaker from the other side of the world, because obviously sustainability and accountancy are both global. And I think we're going to be seeing hopefully a lot of cooperation and coordination in the coming years. So without further ado, welcome everybody. So I'm going to turn to our first speaker. So if I can ask Caroline to introduce herself, and I think Caroline's going to share a few slides with us on her perspective on the kind of regulatory environment around sustainability and accounting. So Caroline, over to you.
Well, good morning, everyone. So my name is Caroline Bridges, and I work at the IFRS Foundation, and I am a technical director. Now, my background is that I started working for the Integrated Reporting Council in 2020, because before that I was a lecturer in accounting and sustainability in Auckland, New Zealand. So again, traveling the world, these things are very much crossing borders. And I started with the IIRC, but now I'm with the foundation because through several mergers, started trying to sort of reduce this sort of spaghetti soup of acronyms and frameworks. So my background is kind of through that way, but I also am a chartered accountant as well. So sharing both of those. Now I'm going to try and share my slides, and let me know when you can see those slides.
Yep, that's come up, Caroline.
Okay, great. So that's who I am. I'm going to try, and I've tried to sort of limit the number of slides that I have, because I think it's more important that you see some things there, and I'll try and talk to them. But obviously, stick any questions in the chat and I'll try and address those, or Gareth will prompt me to do that afterwards. Okay, so what I'm really wanting to talk about today is, come on, there we go. I always start with this slide because I think it's really important to think about the foundation and what this IFRS Foundation has been setting accounting standards for many years. What is its relationship with sustainability? So we have what's called a monitoring board at the top that includes companies, organizations like IOSCO, securities dealers, and they are the monitoring board that kind of say what the foundation should be doing. We have trustees who are independent from around the world, thinking about the due process. There's very much a due process, a big handbook on how this foundation operates. and is part of the reason that it was given this mandate, took on this mandate of preparing sustainability standards. So we've got these two boards, and they're each made up of 14 members and geographically diverse, gender diverse. And we have the Accounting Standards Board, again, that's been around for a long time, all those accounting standards that you learn about, and the sustainability standards that was formed in 2021 at COP26. Now, the accounting standards have something called an interpretations committee to kind of look at whether standards are being interpreted correctly. We're just not at that stage in terms of the ISSB. So that's kind of the structure of this particular organization. We are two separate boards within this one foundation. So what has the ISSB done? Well, it's been there since 2021. And we have issued two standards that came out in June 2023. So that's it, two standards. Huge amount of work went into completing those standards. And the important part of these standards was, one is called what we call general requirements for sustainability related financial disclosures, risks and opportunities. And it's a big long acronym that's right throughout the standard. And the S2 is specifically around climate. Now, it was always going to be, you need to look at climate, but then it was actually, you need to think about all sustainability related risks and opportunities, which is why we have S1. I don't know that that was always going to be envisaged way back in 2020. The structure of these standards follows TCFD. Now, TCFD, Task Force for Climate-Related Financial Disclosures, came out in 2015, and they picked up this particular structure. You have to talk about governance, you have to talk about strategy, you have to think about your risk management, and then you have to think about your measurements, your metrics, and then your targets or your future performance. And this structure has been adopted by these particular standards and around other standards that have been developing around the world, because it just kind of makes sense to business people. I'm not going to go into the different standards, but going from that particular structure, it goes into detailing what requirements are going to be needed to be compliant with these particular standards. We have proportionality measures for companies, for instance, for small and medium-sized enterprises where they either don't have the data, it's too costly to adopt, and you can delay thinking about your other risks and opportunities and figure on climate first. They also include what's called SASB standards. So SASB standards was one of those organizations that came together to form the ISSB. So that's looking at industry standards, looking at industries and what are those common metrics that should be disclosed for those particular industries. And that reflects as an appendix. At the moment, it's kind of voluntary, but the idea is that once we kind of get those standards through, these industry standards through a due process, they will then become mandatory with these particular standards. So why are we doing what we're doing? Why are we issuing these sustainability standards? Now, this goes back to my integrated reporting, where I think holistic reporting is kind of what's necessary. It's important for our stakeholders. Now, unashamedly, the foundation's stakeholders are investors. So we want decision useful information for investors. And we want that to be consistent, comparable, all those characteristics that you kind of get from accounting that you need to also translate into sustainability. That conceptual framework is kind of embedded within our S1, that general requirements where relevant. It's also important for society thinking about the relationship or how a company creates value is linked to the performance or its relationship with society, as well as its effect on the natural environment and its effect on the general economy. So all of those things are reasons why we need to have these standards that get that consistency, comparability, and decision useful information. So that's kind of what we're trying to do and why we're trying to do it. Here at the ISSB, we try to think talk about a global baseline. We try and think about this as being not just one particular country, but global, because it's only when we get that global comparability that we're really going to get the information being useful. So we're hoping that that's what we're trying to do, get that baseline of disclosures, and then you can add different requirements for different jurisdictions and countries. IOSCO, that's securities dealers, very importantly have endorsed these standards for adoption around the world. These standards, we don't have assurance requirements. We're going to leave that to the IAASB, but as these standards were developed, we talked a lot to them. Then the jurisdictions, of which the UK is one, of course, and you'll hear a little bit more about how that's working out with the UK. But an important part of what we're doing is linking that to each individual jurisdiction, making sure they understand what the standards are and what we're trying to do. And then those market participants who can hopefully adopt voluntarily, even if they're not required to do so. Okay, so what is it that we're doing right now? So we've issued 2 standards. So what have we been doing since then? A lot of our time has been around implementation, supporting implementation with educational resources. I'll put some links into the chat after I've spoken to you if you're interested in having a look. We have an transition implementation group, so people who are trying to adopt this right now, they come up with questions, and we can try and figure out how those standards are working as we go. We're going to develop a digital taxonomy, which would be the subject of a whole different discussion if you wanted some suggestions for another webinar. We're looking at adoption in the individual jurisdictions, such as the UK, such as in Australia, such as around Europe. And of course, Europe is an important discussion that I'll come on to next. And we've got a work plan looking at biodiversity and human capital as future standards, and then thinking about, is that 1 standard or is that 10 for each of those? Interoperability, this is where we might think about what's going on in Europe. We want these standards to be a global baseline, but we also want them to work with other standards that are being developed around the world, of which the EU is very important. Now, we're going to hear some announcements today, we think, about the EU and this omnibus regulation, and it'll be interesting to see what comes out of that. But the ISSB has worked very closely with the EU from the start to try and make sure that those standards that the EU have developed and the ones that we have developed kind of work together. And we published some documentation for that. And the last part is really thinking about, so then one's interoperability means working with other frameworks and standards. And then connectivity is the other kind of buzzword. And within the foundation, that means connecting financial and other sustainability related risks and opportunities. So connecting information together. Now I put this up, this is a screen grab from our website, where we've now got a separate part of our website looking at connectivity. And really it's saying, well, what do we mean by connectivity? And we divided it into 2 parts. Connectivity is making those standards work together in terms of their purpose, what we're trying to achieve. It has to be for investors. We use the same definition of materiality and the same language. So in terms of the products that we're using, we're going to use the same language when it means the same thing, and different language when we don't mean the same thing. So in terms of those conceptual ideas and some of the other references in there. And we do have these cross projects. For instance, the accounting standards are thinking about, how do I report on climate in the financial statements? And how does that link to requirements of the disclosures from S2? So that's kind of what I've briefly summarized. So the ISSB is around sustainability standards. You've only published 2, but S1 is an all-encompassing. We're trying to work interoperability with other frameworks and connecting within the accounting and sustainability frameworks to make sure that the information looks consistent when it's published. And working very hard with individual jurisdictions around the world to see that they are being adopted in different jurisdictions. It kind of started off a little slow, and then towards the end of last year, we saw this acceleration of the processes within different countries around how they are moving forward to adopting the ISSB standards. We've been very encouraged about that. Okay, so I feel like I've been ongoing for too long. So I
Not at all,
rattle
Carol. I
through.
think that was fascinating.
Yeah,
That
right. So I'm going to stop sharing at that point. Let me just figure out how I move my screen. There we go.
that was a fab scene setter, actually, I think, for the webinar. Thank you so much, Caroline. And actually, that point you're making around connectivity, I mean, so I'm guessing 10 years ago, an awful lot of accountants would have said, oh, sustainability, that's nothing to do with us. We do the numbers, that's somebody else's department. But actually, that's clearly not the case. And in fact, that connectivity piece, I think also what you're talking about in terms of investor pressures, I guess banks increasingly are looking for sustainability in order to approve loans. Even clients, public sector clients are insisting on sustainability in businesses they're going to work with. So I guess every organization needs to be very conscious of these.
That's right. I mean, it feels like this has been bubbling along for many, many years. But I think 2020 and COVID really, that was kind of the key. In 2020, I was tracking announcements regarding sustainability, and it just I got to the point where I couldn't keep track anymore. There were so many developments going on everywhere that it just kind of took off. It just felt like everyone suddenly wanted to know more, and this information suddenly became very important because of this increased demand.
Fantastic. Well, thank you very much for starting us off, Caroline. Maybe hear from you again later on. But I'd like to turn now to Paul. Paul, I don't know if you would mind introducing yourself and taking us through your thoughts.
Sure, thanks, Gareth, and good morning, everyone. So my name is Paul Winner. I'm a partner at Forbes Mazars. I have a sort of multitude of different roles, but one of my main focuses is sustainability reporting and assurance. And I'm the Forbes Mazars global leader on the IFRS sustainability disclosure standards. So thanks very much, Caroline, for that introduction to the standards themselves. Hopefully you can see my slides. Yeah. So what I'm going to do now is to drill back down to the UK level. So Caroline talked about jurisdictions adopting the standards. I'm going to talk about what we're doing in terms of our regulatory framework, adopting the UK version of the IFRS standards, and then just touch on some implementation challenges for first-time users. So in terms of the regulatory framework, what am I talking about? On the left-hand side of this is a nice shield diagram that the IASB and IESBA published recently when they issued the International Sustainability Standard, it's the 5000, and the IESA, the International Ethics Standard. So that diagram sets out what a regulatory framework would include. It's got the reporting framework, which Caroline just talked about, the assurance framework, and the ethical standards as well. So on the right hand side is the nearest I could find to a picture of a black hole, because that's pretty much what we've got in the UK just right now in terms of the UK regulatory framework around this. We've not been the fastest off the mark, I think it's fair to say, when it comes to sustainability reporting. So recently the FRC undertook a sustainability assurance market study, and the recommendations they came out with, which were very much aligned with what we and all the other firms and what the ICAW and many other respondents said to that market study, was we need a clear policy framework for sustainability reporting and assurance. The FRC's report focused on assurance at the moment. So clear policy framework, we need a proper regulatory regime, something that covers standard setting, oversight of reporting and assurance, enforcement and market monitoring, so like the FRC does for audits, and also the market needs better information on the quality of the sustainability information that's out there. So that's what the FRC recommended in its recent report, published in the last month or so. So where are we now then? So I've rag rated where we are in terms of 4 key things that jurisdictions need to consider. Which standards are you going to use? So I've slightly generously marked as green in the UK for that, because I think we've pretty much got a decision on that, but we are waiting consultation. I'll come on to that in a minute. So the standards, I think we're okay with. Timelines and reliefs. So the ISSB standards include transitional reliefs. They're covered in what the UK is currently planning to do. What we don't know, highlighted in red in that bottom left column, is the first implementation date. And the bits that are totally unknown at the moment on the right hand side of that chart in red are which entities are going to report. Probably assume it's going to be public interest entities, listed companies, but what about others, and when might others, large private companies, for example, SMEs, government and public sector? There is a separate international standard from IPSASB, the public sector board, that's currently out for consultation for the public sector. So we don't know who's going to be reporting, and in terms of assurance, that's also an unknown. We assume the FRC will adopt ISA 5000. But that's not necessarily certain, but we don't know when assurance will be needed, or who will provide that assurance and what sorts of levels of assurance.
Actually, Paul, sorry, can I just butt in at that point, going back to the sort of which entities piece, almost the point I raised after Caroline spoke around, even if this is only relevant to a certain type of demographic of organisation, will client tender pressures, will investor pressures, will bank pressures mean that actually even organisations that aren't necessarily captured by the regulation possibly will have to do this anyway?
Yeah, sure. And if I just skip a slide, it's it's like a planted question that wasn't a planted question. So this is I'll go back to the previous slide in a minute. But in terms of relevance to others, so this slide's assuming that we'll be reporting for listeds and public interest entities. But why would other companies want to do this? So I think there are good reasons. Internal ones, you got a better understanding of what your risks are. And you can manage your own impact on climate and also manage the impact of climate on your business. So if your risks are increased flooding due to climate change, well, you've identified that risk and you can start to address it. So I think there are those good internal reasons why people should consider adopting sustainability reporting. And then there are the external reasons as well. It would give you a competitive advantage. We as a firm, for example, if we're signing up with people, we require them to have certain commitments around sustainability. Customer expectations, clearly, the world's changing and people are thinking about, if I can buy a more sustainable product from X rather than Y, then I'll probably go with X. And then there's the lenders and the investors piece that you mentioned there, Gareth, as well. And the trickle down effect, for want of a better phrase, if you're in the value chain of a public interest entity that's reporting, they're likely to be coming for information of some description at some point. So there are lots of good reasons, I think, why it does apply to everybody proportionately, I think, is probably the important bit. You wouldn't necessarily go the whole hog if you're an SME reporting using the IFRS standards, but you could certainly use the framework and the principles, I think. So if I go back to where we are then in terms of adopting the standards themselves, I mentioned on the previous slide, I've generously graded it green. The recommendation has gone to the government to endorse the IFRS S1 and S2 standards with just some minor amendments. Personally, I'm really pleased with that, because one of the challenges with implementing the standards is there's a global baseline of IFRS standards, and what I don't think we would want to see is jurisdictions do carve-outs in particular. If you want to add things in, okay. And I'm pleased to see that the UK effectively hasn't really changed them. The effective date will be set by the government. There are transitional reliefs there, and they've removed one and extended another, so that not massive changes in terms of the proposals that have gone forward. So that's good to see. And at the bottom, we've got a timeline of what the current expectation is in spring. Loosely defined, we're expecting the consultation from DBT on those standards. I don't imagine there'll be a lot of pushback, given that we've taken the international standards more or less out of the box, with final endorsement later on this year. At some point in 2025, not clear yet when it would be, we expect that the FCA will consult on the who should respond. Again, they will be focused probably on the larger end of the market, the pies and the listeds, but we're expecting that during 25. And the earliest they can possibly be adopted, obviously, then is 2026. But we're not sure whether that, depending on the time frame for those consultations, is going to be realistic. So watch this space on on all of that during 2025, but it should become much clearer fairly soon. And then the last thing I just wanted to touch on was implementation challenges. I'm not going to go through it in detail, there's a lot on the slides, but when you're first time implementing sustainability reporting at whatever level, be that full IFRS reporting or voluntary version or a scaled down proportionate version, some of the key things I think that preparers will need to think about. So how do you identify material risks and opportunities? That's required in S1. And it's thinking about there what's material to the user. And Caroline mentioned that the IFRS unashamedly is focused on financial materiality. So it's not the double materiality that we see in Europe. It's not the impact materiality of the global reporting GRI standards. So very much financial materiality. Fair presentation. This is probably the most important bit, I think. There's a lot of focus on the risk of greenwashing. So fair presentation is a critical part of the IFRS standards. And I think the tone and balance of a report is going to be really important to make sure that there isn't that greenwashing or wishing or hushing or the other versions of green that have emerged in recent years. And then in terms of the value chain, if you're doing full IFRS reporting and say you're a listed company or whatever, then thinking about the value chain, how far do you go down the value chain? Obviously, at some point, you've got to cover the whole value chain, but you can't necessarily do that straight away. So how far do you go? But more importantly, probably, is what data is there out there in your value chain? And is it reliable data? Have they had assurance on it and those sorts of things? And then finally, the last slide, a few more things just to think about. Data quality, this is the big thing. Every conference you go to on sustainability reporting, they'll do a survey. What's the biggest issue? Data quality is pretty much always top of the list. So there's a lot there to do around how confident you are that the data is of good quality. Has third-party data been assured? Is it consistent across the group? If you're a group entity, how do you make sure you're getting consistent data? Systems and controls, I think there's a wide acknowledgement that they won't be as mature as financial controls. They might even not exist in many cases. So that's a key area of focus. And then when it comes to, particularly if you need assurance, documentation evidence, you've got evidence that your controls are operating, you've got supporting information for the data, and particularly around estimates, because they're going to be massive in this, all the stuff you would expect in a financial statements audit around judgments, assumptions, and so on. So that's a whistle-stop tour through the UK adoption, and just touching on what we think preparers might find challenging.
Fabulous. Perfect, Paul. That's fantastic. And actually, that point you were making about data quality, I kicked off the webinar giving an analogy around, where we were with data analytics, AI sort of 5-6 years ago. And actually, I wonder whether there's a really close link, because I know there are firms out there that are using AI in order to generate sustainability data. So there's kind of a connection there. But then I guess the other funny angle is that we're probably all aware of the energy use and even water use that AI systems are using. And actually, is there a negative sustainability implication of the growth in AI? So there's some kind of funny interconnections with this other big wave we've seen across the sector, I think.
Yeah, and it's funny, actually, we had a conversation about that very topic yesterday internally, where we're talking about that exactly what you've just said about the AI, the power impacts, the water impacts, but also more widely in sustainability. I'm a geologist by background. I didn't say that at the beginning. So I'm a geologist, and I went to
We could all tell, Paul. We could all tell.
I went to a geological society thing on Monday night that was talking about critical minerals. And there were charts on there showing how many kilograms of critical minerals are needed for an electric car compared to a traditional car, and it's phenomenal. And there are all those sorts of interplays that are out there, I think, in terms of, yes, we need to go to electric, but actually there are all sorts of other impacts. So critical minerals, the mining impacts, the children mining in Congo, and all those sorts of horror stories you hear about mining. So great that we're going to get those, but there are other impacts. And that's why I think when we talk sustainability, it's much more than climate for start off. And that's the E, the S, and the G. The social bit is really important. And that's one that I think we do need to keep a close eye on.
Fantastic. Thank you very much for your insight, Paul. That's brilliant. Rosie, I'm going to come to you for a bit of insight on, what we've already heard, your own thoughts, and particularly, I know Caroline mentioned the looming announcement about the EU omnibus regulation, and I believe you may have had your ear to the ground on some of this stuff and what may be coming down the line.
Yes, morning everyone. a quick introduction. So I'm Rosie Dunscombe from Blue Crane Consulting. I'm also a chartered accountant, and similar to Caroline, I've been in this space for a while and been part of that kind of harmonisation and merging of entities. So I worked as an accountant for broadly 10 years, then retrained as an environmental economist. So I've been involved in this space. I'm actually on the IFRS Sustainability Reference Group, so I've been part of the development of those standards. But also, as Gareth noted, been keeping an eye on what's happening in Europe with CSRD, so the Corporate Sustainability Reporting Directive. And today is, I'm sure you're all on the edge of your seats, a very exciting day when they're meant to be launching the EU Omnibus package, which means essentially what's happened is with the launch of CSRD, there's been quite a lot of pushback that the requirements there are quite challenging, I think. We haven't had a lot of time to prepare. They're much more demanding, I'd say, than the IFRS standards. I think, and I hope Caroline doesn't disagree with anything I say, the IFRS has very much taken a transitional approach to this, of saying we're going to focus on financial materiality, on investor useful information, whilst Europe has said we're going to go full double materiality. We're really looking at kind of the global stakeholder here and an interest in impacts on the environment, on social and governance, as well as dependencies. And today they're going to announce, unless they delay, they're going to announce how they are going to simplify those packages in Europe. So that's CSRD, the C, and another on other packages like EU taxonomy and the due diligence requirements. It sounds like there were some leaks at the weekend of draft guidance that they might be scaling back on the organisations that are captured. It sounds like they're still going to be requiring double materiality, and the standards in that regard, the details should be staying the same, but it sounds like they're going to scale back the entities it catches. So a few months ago, they were talking about, for example, having an SME standard, and SMEs will need to start reporting in a couple of years. Now they're sort of pushing that to one side, looking to redefine what a large entity is. So it's unknown at the moment. I don't think we should be focusing hugely on that today, but just to note, some people might have heard that's happening and the announcement is coming out today. And for that will affect, I think, the broader direction of travel, because the EU has been pushing the boundaries there and I suppose leading the way in many senses on the reporting requirements. And it does affect UK companies if you have significant operations in Europe. So watch this space. I know I said I wasn't going to share a slide, Gareth, but I do actually have one slide. I might just pop on the screen if that's all right. Just as everyone else was talking, I thought this could be useful to reflect on what others were saying. Let's see if I can get this right. Just sort of stepping back, this is a timeline really of something I've developed for what's been happening over the last few years. And we can see there that the IFRS standards, sustainability standards are there. CSRD, as I mentioned, is there. But if you take nothing else away from this slide, you can see that I started with 2020 because I just can't fit so many years on the timeline. We are having more and more events happening in this sustainability standard space, standards and frameworks. And it really, in 2020, I see that as quite an important point to note, that the WEF IBC common metrics, which you may or may not have heard of, but that I think was the first point where we really saw accounting firms really getting involved in this space. And I think, as Caroline mentioned, there's been this kind of spaghetti or alphabet soup of standards and frameworks and different approaches going on, and it was a very messy space. And when I moved from accounting into sustainability, I was kind of horrified at the Wild West. Everyone had their own approach. So in 2020, the Big Four came together with the World Economic Forum and said, let's try and harmonise, let's try and come up with these common metrics for sustainability. And that was a real line in the sand, I felt, that then led on to enable some consistency in reporting. We then had the formation of the International Sustainability Standards Board that Caroline spoke to. TCFD, which had been introduced earlier, became mandatory in 2022. And that was really important because those four pillars underpinning the TCFD of reporting on an organisation's governance, strategy, risk management, and metrics and targets is now the golden thread that goes through all the standards you'll see today. So it's come from the TCFD, it's in the IFRS sustainability standards, it's in the European standards, in CSRD. It's also in voluntary frameworks such as the TNFD, which is the Task Force for Nature-Related Financial Disclosures. And what you might be picking up here is you have to be an expert in acronyms to have anything to say in the sustainability space. And I think one of the key messages I'd say is you can see it's a really busy space, and it's part of my job to keep up to date with what's happening, and it's very challenging, and I cannot always keep up to date with what's going on. And I'm just saying that to sort of be open and honest, and to hopefully give some confidence to people who feel like what is going on. And I think, as Paul said, there's this black hole in the UK. We haven't got certainty yet. There's just so much happening. I think do take away that you can see more and more is happening as the years progress, but we are seeing harmonisation with those 4 pillars of governance, strategy, risk management, metrics and targets. So there is consistency, and Caroline mentioned that they've been working and speaking with people developed with FRAG and CSRD. You know, that people are uniting to try and harmonise this space. So that's one thing I would say. It was also mentioned, I think I'll just stop sharing there. So it was also mentioned, I think, by both Paul and Caroline, that, you know, there is this drive, particularly in the UK at the moment, for this consistency between the front and back end of accounts. So sustainability reporting isn't something where, oh yeah, the sustainability guys who are like down the corridor, they sit over there. Us as the finance team, we sit over here. That just cannot be happening anymore. We need to be speaking, collaborating and working together. And, you know, the FRC has said it, all the standard setters are saying it, that we want consistency. You absolutely cannot have the sort of the director's narrative in the front half of your report saying, oh, we've looked at climate change and it presents these risks and these opportunities to our business, and the back end of the accounts just being silent on that. That's not okay. We need consistency, and auditors, financial auditors, are looking for that now. Increasingly, we're seeing more and more questions about that. So they're kind of, there's no escape, but see it as an opportunity and as a positive as well, to start to slowly look at those things and see how they impact the back end of your statements. That's really important. And the IASB, so the International Accounting Standards Board, are releasing guidance around that as well. So it's not just this siloed thing that's happening in the sustainability space. It is super relevant for accountants because, funnily enough, sustainability experts aren't really going to necessarily understand how climate risk is going to affect fair value of assets. So that's something, and I think it starts to feed into the next session, Gareth, really about the skills of accountants and what their role is. And we are seeing, just to know, I do a lot of work with the Institute of Chartered Accountants in England and Wales. So I wrote their sustainability certificate a few years ago. And what we're seeing is there's a revised ACA coming out later this year, which has a sustainability and ethics paper, because it has been recognised accountants have a role, really big role to play in this transition. There's also a lot of CPD available. Some people might have noticed this 50 hours of CPD being launched by the ICAW. I don't get paid for advertising any of that. It's just worth noting that is a signal of what's happening and what is expected of accountants. And I think very much the messaging for accountants around this is that we do have all the skills that are needed, but there is a knowledge gap. So it's really not a skills gap, it's a knowledge gap. And as accountants, we don't need to become sustainability experts, but we do need to become competent enough to be able to work with the subject matter experts. So to be able to say, oh, I've seen this narrative in the front end of the annual report talking about climate change. Should we discuss how that could be affecting the value of our assets, or how that could be affecting the provisions in the balance sheet? You know, knowing when to ask questions. And I think that's what all this training is about, that's starting to appear. And I think that's really the role of accountants in the transition, that we don't need to be experts, but we do need to be competent. Yes, and I think that speaks also to Paul's point about assurance. He talked about sustainability assurance, and we do need, the FRC has come out and said we need structure around this, we need regulation, we need leadership. And some of the kind of, I suppose, whispers on the wind that I've been hearing are, should we be making sustainability CPD mandatory for accountants? Should we be creating a register for organisations that want to provide sustainability assurance, the way there is a register for audit companies? So I think the point is this direction of travel. What we're seeing here, the direction of travel is we're starting to have requirements for limited assurance in these European requirements. And I think that's not going to change in the omnibus from what I have seen, but hold on to your hats. So that requirement for assurance over sustainability information is definitely there. There's been a lot of chat around poor quality disclosures, and assurance is really a way to tackle that. And I think we can't deny that accountants have a big role to play in that. I also mentioned the trickle-down effect coming because now reporting standards are increasingly requiring not just reporting over your operations, but reporting across your value chain. So if you're a small organization, you can't sit there and say, well, I'm not report by these standards, they're only for large entities. You're going to be in someone's value chain, or you're going to be seeking finance from a finance institution, and they are required to report on this. So it is going to trickle down. Also, I think it was in Caroline's slide, she talked about this systems approach. So not just focusing on climate, but looking at the full ESG, social issues as well. You know, we are in the midst of a triple crisis at the moment on climate, nature, and social inequality. So we're heading in that direction as well. And to be aware that whilst the IFRS is investor-focused financial materiality, in Europe, we're talking about double materiality. So those are the four sort of takeaways, I think, in where we're heading.
Fantastic. Thank you, Rosie. Really useful. I think you make an interesting point around whether, you know, is it sustainability experts that become more fluent with accountancy, or is it accountancy experts that become more fluent with sustainability? I'm sure most of us on the call would hope for the latter, because that's a revenue stream that perhaps we can take advantage of. Oh, apologies, my dogs are just going crazy. Yeah, you just started introducing there a bit about the role of accountants in this transition. So I thought I might introduce a couple of our other speakers to give us a bit of a thought here. So Jess, who I believe it's just after 8 p.m. for you in Sydney. So can you just give us a few thoughts on that transition that accountants can help?
Yeah, I think to try and talk as practically as I can for this audience, we've heard a lot around the sustainability standards, and there's a lot in there, but you can carve out the portion that in the next couple of years, at least, most accountants and bookkeepers are going to be involved in. So under those standards, a portion of it says you need to account for the carbon emissions of this organization, and carbon accounting is done under a standard called the GHG protocol. It is not as black and white as the financial standards you would be used to, but important to know if you're an accountant or bookkeeper interested in this space that there is a GHG protocol, and essentially the whole world reports on carbon emissions under this, and nearly all of the jurisdictions that are implementing ISSB, which we heard of, will say when it comes to the carbon accounting, do it under this standard. And so one of the biggest opportunities for the accountants and bookkeepers here is understanding that whether your clients are actually caught under mandatory reporting or not, they're going to probably be asked for this data. And so you have a role in doing the carbon accounting for them under that standard to an auditable level. And to just highlight why that's going to affect your clients, I know a lot of people in the chat have introduced themselves as bookkeepers or from smaller firms, and you're probably thinking, how is any of this ever going to be on my plate? One of the key things to understand for accountants when it comes to carbon accounting under the standards is that a big portion, almost 90% or more of everyone's emissions at that big end of town come from their supply chain. And that accounting standard says all purchased goods and services have emissions associated with them, and you need to account for that. So in even more practical terms, it's essentially saying you need to take the general ledger for the reporting period, and for every transaction, you need to map it like you would coding a financial transactions to an emissions source. And you can do that in an average land quite easily. The UK government will have industry averages to say 10,000 pounds on laptops equals this amount of carbon. You multiply it by the industry average. You'll probably help clients do that. But of course, unless the company spends less on laptops, the emissions won't come down. And so the only way for that to become more accurate and actionable and to reach all the targets that everyone's talking about is to start getting primary data from the specific suppliers. What's the difference between company A and B's laptops? And to get that, you need to go and tap the shoulders on the suppliers. And when over 90% of businesses in the world are SMBs, you can expect that over the next few years, as a result, the domino effect of these standards will be somebody tapping your client or your company on the shoulder saying, can you provide the emissions associated with the goods and services that you are selling me? So helping clients be ready for that is the key opportunity, and upskilling, I would say, in the carbon accounting aspect as step one is really where a lot of accounting firms are starting at the moment. Oh, sorry, you're on mute, sorry.
Schoolboy error again. So thank you, Jess. So we'll come back to you very shortly, actually, but wonder if just for a minute or two, Fran might give some thoughts again on that transition and the way that accountants can support it.
It's interesting, isn't it? Just to segue from Jess there, the UK net zero, the first UK net zero census came out at the end of last year, and it said that in the last 12 months, 37% of SMEs had been asked for their carbon data. I think I'll talk more in the skills section about about how bookkeepers are naturally the people to be thinking about, or partnering with people like Someday that Jess represents. So I think looking at a bigger picture here, that sustainability initiatives, net zero initiatives, or nature impact initiatives can be made or broken by the finance department, by the CFO, by the accountant in a small firm, because they'll say we can't afford to do that. So accountants have an amazing role to save the world in this sense, in that they can fast track these sustainability initiatives through. Accountants have been traditionally trained to help an organisation maximise profit, regardless of impact on people and planet. It's to some extent ingrained there, and we can see some awful examples of that even this year and last year in the UK water companies deciding that they have to pay shareholders over polluting rivers and oceans and drinking water, and then expecting the customer to spend more on what is a basic human right, in my opinion. So accountancy, we have a structure here where we see our employees as a cost, rather than an asset. So there is an ingrained sort of natural instinct to maximize profits. So accountants have a role because they can start looking at the cost of not, and the benefit of actually assessing for those risks and opportunities in sustainability related issues, and making sure that they actually are helping the company to budget for such initiatives. I think I've just sort of taken a wider approach there because I want to drill down on the skills and knowledge later. But I think the accountants can save the world.
That's a great takeaway, actually. I think I might use that in LinkedIn, actually, Fran. Thank you. Well, I'd like to kind of now move on to a phase of the webinar, having a think about the way accountants are actually developing commercial sustainability products. I do think that with digital data, AI, it's actually commoditizing a lot of financial accountancy work. I think sustainability gives a nice opportunity for accountants to bring in new revenue streams, particularly that may have improved margins compared to some of the financial work that's increasingly done by technology. So I'd like to introduce another speaker, Remy. So Remy, if you want to introduce yourself and actually give us your thoughts on this topic.
Yeah, sure. Thanks for having me, and hi everyone. So I'm Remy Bos. I am a product strategy director at Oracle. I mainly focus on our sustainability applications, but also a bit broader on our broader sustainability technology. Now, hearing everyone speak about all the regulations, etc., I had a kind of a different talk track in mind, but I'll flip myself a bit to talk more from our customers' perspective. So the actual businesses that need to do this type of accounting, and what companies like us, I will not speak purely about Oracle, but more about the field, what we are developing and what we're putting in place to make sure that whatever we report is actually accurate, complete, and reliable. Bit that angle. let me share. Let me know if you can see my slides.
Yep,
All
that's
good?
come up, Remy.
Good, good. So yeah, like I said, I'm going to flip a bit from my customer's perspective or the business perspective, because what was said earlier is definitely true. There is a complete letter soup, or luckily it's reducing, of standards and frameworks and guidelines. And whenever I speak to my customers, which are multinationals most often, they report to actually 4 or 5 of these frameworks. And that makes it quite a complex task. Also, of course, from the accounting or audit perspective, makes it a complex task. And why is that? Well, I mean, these types of companies have been reporting towards the NFRD, right? The Non-Financial Reporting Directive, which was in place, I think, from 2014. So they're kind of used to having to report non-financials, but now suddenly sort of the whole market shifted. As was said earlier, in COVID came this sort of rapid acceleration, and a lot of things changed, especially the CSRD, of course, came along, but also the IFRS. And what changed were the underlying sort of principles. It became, where it was first maybe a bit loose sandy, it now is more sort of cemented in what you need to report, where you need to report it, on what timelines. Like we said, boundaries, which is another important topic for the accountants, right? If you think about influence versus control, that is sort of a meta change in how to think about what you're auditing. Is it under the company's influence? Is it within the boundaries of control? Does that mean this company needs to report it? And these are the same challenges that these companies internally are fighting about as well, right? What do we need to include, even if we have done a materiality assessment? But other things like timelines, of course, now you have to report your non-financials exactly as on the timeline as your financials. You report them in your annual report under the CSRD, right? Tagging, digital tagging, right? XBRL, which we have in Europe, the ESEF. That is also from a technology perspective. Again, I come a bit from the technology side, is something that we on the accounting software side take into account and try and ease these businesses to say there are solutions. Now, a bit about, so what do we develop in these solutions? So from my perspective, and this is maybe a bit, I'm drawing again a bit broader, and this was said earlier actually, it needs to be integrated, financial and non-financial, and that's kind of what you're seeing on the IFRS standards as well. It's more than just reporting for the sake of reporting. It's actually bringing that into the strategy. It's helping companies get a clearer view on their impacts and how the outside world impacts them, of course, right? Double materiality wise, but also how to think about how to monitor this, how to make a managerial system like we have done on the finance side. And again, as on the page, how we make sure it's accountable, how do we make sure our people are productive, and that we use that data efficiency. And I think the underlying consensus between the businesses that I speak to is that they want to build in that same rigor and that same technical expertise as we have done for finance. But that is very hard if you think about it, that this type of data comes from many, many sources, and the data itself might come in many forms, right? No longer are we talking simple dollars, euros, pounds that come out of an ERP system. We're talking kilowatt hours, liters, any other unit of measure you can possibly think of. And especially also that it comes from many, many systems. So how do we develop, as accounting, the software developers, how do we help these customers develop something that keeps them productive? And so, yeah, it has to be a system that can collect data while keeping track of the lineage from many, many sources. It also has to be very much accountable, right? That's what I mean with lineage. We have to make sure that whenever we get audited by our auditors, that we can trace every statement back to its originating source system, and that say, hey, this is exactly where it originated, and that's the whole flow until the end. We report it out to the world. And then lastly, of course, yeah, efficiency. We want to help businesses become more efficient in, say you come to that end phase where you have good quality data, you have a good visibility of where you stand compared to maybe your strategy plans or etc. How can you make use of that, right? Really get them to act on the data. That's probably third. And so this is a toy model, and a thing that I always bring up is because when we speak about sort of creating that same rigor and technical expertise, my mind, as I come from accounting, not a surprise here, always goes back to a record to report process. So here on the left at the very beginning, it's really being able to connect to that source system and being able to provide that full data lineage back to where a transaction originated. But also then at every step build in the same checks and balances as we've done for our financial record report process. So that includes things on how to making sure that every step is auditable, how we prepare data or transform data from, say, kilowatt hour to CO2e, or how do we model and align it to a specific standard, whether that be CSRD reporting or IFRS, and how do we plan on that data, right? We have to, of course, make some forward-looking statements in these reports. So how do we make sure that whenever we do make a forward-looking statement, that an accountant or an auditor who's actually more so trained to look historically is also finds it a reasonable assumption and a reasonable estimation for the company to make that. I realize I'm already a few minutes in. I will stop it there. I give it back to you.
Thank you, Remy. Really interesting insight. Thanks for sharing that. Actually, before we move on to, I want to hear Jess and Fran's thoughts on this, but I know Caroline's going to be leaving us shortly. So actually, Caroline, any reflections on anything you've heard in the last hour?
Do you know, I really enjoyed hearing from the other speakers because it basically complements everything that we are doing, and I really enjoy hearing these other, as I say, complementary comments that really means that all of us in the market are really trying to work in the same direction. I like Rosie's comment about this is about a knowledge gap, not a skills gap. I thought that was great. And this idea of CBD for sustainability being mandatory, I think that's going to actually be really important. Everything that I've read has said that where you get the accountants and the CFO involved in the development of sustainability and integrated information, it is going to be much more successful. They are the key person. They have the systems, all from the diagrams I'm seeing, these flows. This process that we as accountants are so good at is going to what makes everything that we do so much more successful. That does not mean to say it's not challenging. And I know I've seen people throw their hands in the air. It's like, what, forgive me, what is going on? But it is the way of the future. We can't avoid it. This road is going to continue going. And I really like I think the UK is going to be actually very good at leading what's going on. And I really like their roadmap. And what goes on in Europe and what happens today is going to be an indicator of how easy it is for all of us going forward. But, you know, what's going on in Australia is great. I think and in Asia, lots of really interesting initiatives. Okay, so that's all from me today because I have to go off to another presentation, but I really enjoyed, and thank you so much for the opportunity to talk today. So thank you, guys.
Thank you for sharing your insight, Caroline. Really great to hear from you. Enjoy the rest of your day. Well, I'm now going to come back to, and I've seen some stuff in the chat box, some really interesting stuff. We talked earlier about stakeholders like banks, investors, customers who are going to increasingly insist that companies adopt sustainability initiatives and reporting, even if they don't actually technically have to. Some stuff in the chat box around young adults that we may be recruiting, particularly Gen Z and I guess Gen Alpha who are following on. You know, I hear so many firms talking about the fact that they're asked by young adults what their sustainability policies and initiatives are when they're making decisions about who to go and work for. And in fact, Jess, you shared a really arresting statistic that you ask your students at Someday Academy on a scale of 1 to 5, how important is it that the firm you go to provides opportunities to work on sustainability? And around 95% say 5, very, very important. So actually, Jess, can I come back to you? And in fact, why don't you tell us a little bit about yourself and Someday as you move into just thinking about how are firms commercializing sustainability products?
Yeah, 100%. I was actually on a panel with Tamara Summers today in Sydney from Xero. She's the Chief Sustainability Officer there. And she also shared an alarming stat that one of the reasons they don't have a mandatory obligation to report, but the reason that they do is because 2/3 of their workforce say that if Xero isn't responding on sustainability as a company, that they would consider leaving over the next 12 to 24 months. And so the board are like, well, the cost to replace an employee is a lot higher than the cost to comply with reporting that might not be mandatory. So that was super interesting for me to hear as well. So yeah, I think sustainability is such a huge opportunity for accounting firms, obviously. One of the most, I guess, or the biggest opportunities is for the firms to look at how am I going to commercialize this? What am I going to actually sell to my clients? And what are they willing to pay for? And treating it like anything else as a business case. So Someday's carbon accounting software, we train up accounting firms. We believe they're going to have a huge role to play in this. But we always say, treat it like anything else. Pick a champion in the business that's doing business development, that's going to lead this, upskill a few people in the team, and then look at some models where you might pitch to clients that you already have to make sure they understand that you do offer this as a service. So many times I've seen companies come directly and then their accounting firm says, oh, we could have helped them with this. Well, why have they come direct? And we say, well, have you ever told them that this is a service that you do? Have you ever had a conversation with that client to let them know? We're a software company. We don't decide, who your client uses, but you may have a missed opportunity because nobody knew that this was even something that you're looking at. In terms of how we're seeing firms deliver this as a service at the smaller end for firms and bookkeepers, they might add this on as an extra package. They might charge a small amount every month to do the carbon bookkeeping just alongside the financial bookkeeping. We try and make the margins on that good so that you might just connect straight to Xero, get the general ledger in. AI will give you a first pass of suggestions on the coding, and then bookkeepers go and tidy that up. Obviously, it's never 100% correct, as you could imagine. So there's an opportunity there. Accounting firms, especially in that mid-market, might be saying, well, I'm going to do the first baseline for you, and I'm going to set the system up for you, just like I would Xero, and I'm going to charge a few £1,000s to do that for you. And then it's your choice as to whether you keep outsourcing that to us, or we can help upskill you internally. And then you're top of mind if they want additional advisory services around, well, what do I do with these numbers? We've also seen some of the UK firms saying, well, I'm trying to get my clients at the next financial year to move up a tier in the packages that I offer. And so if I put sustainability accounting or carbon accounting in that second or third tier, is that an extra way for me to demonstrate the value of the client paying more for that next tier? So looking at those kind of models, I think, is just a really great starting point, instead of saying suddenly we're an ESG firm and we're going to consult on all of the sustainability things under the world. It's highly unlikely that you're going to be, well, it's probably harsh, but highly unlikely that you're going to be great at that as an accounting firm if you're grappling this the first time and you're not a really large firm or you don't have specific expertise. So I always say, like, know your role, play your role. It's fine to be great at one aspect of sustainability reporting, and no doubt carbon accounting is a very great place for you to have a very key role and then expand from there.
Fantastic. Thank you very much for that insight, Jess. Really useful. Fran, I know you actually work in a practice firm, and be interested in your thoughts. Actually, do you want to introduce yourself and the firm and talk about the work you've been doing?
Yeah, so my company is Triple Bottom Line Accounting, which is based in Norwich. We've grown quite rapidly since, well, we've been around since 2009, but really grew since 2020. So I'm so Triple Bottom Line Accounting is a traditional accountancy practice. We're small, or sort of moving into medium as our turnover grows. And I guess I'm the sustainability consultant who's not an accountant, but understands how the accounting practice works. So they do the HR. I did get involved a lot with the onboarding of new clients, so I understand quite a lot about how an accountancy practice functions, but I'm not an accountant. My husband is a traditional accountant, worked in FTSE 100 companies, now runs the practice. He's also in education, but he's the accountant that understands sustainability. Totally agree with what Jessica was saying there. As soon as this webinar finishes, my LinkedIn post will go out that we are running a client webinar, although we welcome members of the public to explain what we are doing with our commercial product. Or we've got two commercial products. We've got the carbon accounting product, and then we've got the wider ESG product as well. We will be running a webinar on the 25th of March, which is specifically for our clients to explain how it works. We've partnered with a company called Trace, but there are not enough carbon accountants out there. So the carbon accountants themselves have got together in an alliance to say, let's work together, because we need everybody to do this. So there's a lot of people you can partner with as a practice to get that expertise, because we have trained our accountants to be able to talk about carbon accounting. They understand, I update their carbon literacy every year. They understand enough to talk about how it works, but they are not carbon accountants. But the bookkeepers are the people that can be doing the reconciliations. And as Jez says, as time goes on, you can move away from that spend-based approach for calculating your supply chain emissions to more product, service or activity based approach. So they need to be able to understand that and talk about that. And we believe that accounting firms with AI, we're going to be doing less compliance. So we need to move into that advisory space. And this is a really important space, because then we can then help our clients, having done their measurements, to manage those measurements in the most cost-effective way. And actually with carbon efficiency, particularly scope 1 and scope 2 efficiency, there are so many cost savings that you can then put into your sustainability initiatives going forward. We have also commercialized an ESG package. And I think there's a lot of things we do there. We've only got 2 clients, but they're big clients so far, and they're keeping us very, very busy. So we will do that initial information capture, materiality assessment, using tools like SASV and the GRI, but also to some extent common sense as well, because they're so general, they don't get it right sometimes for this specific industry. But our key product, I guess, that we have really developed and we think is quite niche, is that we've created a database of maturity, ESG maturity for the E, the S and the G for different industries and different departments within. So there's an AHR maturity mapping goal, and it's an educational tool, because when you're getting HR or finance or bids or procurement within an organization, to map where they are in maturity, because we'll give them suggestions of what's basic level, intermediate level, advanced level. They're already thinking that's what we could do next, and then we'll run workshops and we'll decide what they might want to do next. But I think with a lot of businesses, they're already doing so much, they just don't know that it's ESG. They don't realize that that's an environmental thing or a social thing, because still a lot of people think ESG is net zero, is carbon. They don't realize it's so much more than that. So I think I've probably gone over my time there, Gareth, but ESG advisory is something I think accountants and accountancy practices can get into.
Fantastic. And certainly I think better than letting the sustainability experts get in on that particular area, where the accountants can become, the sustainability leads, I think. We're gonna sort of finish the webinar with 15 or 20 minutes, just start to think about the skill set that all these changes are then requiring from accountants and finance professionals. I'm going to come to Paul actually, but Paul, I don't know if there's anything you want to say on that last phase around the commercialization of products, and what your firm's doing before we even move into thinking about the skills changes.
Yeah, thanks, Gareth. I mean, I think Fran just mentioned there move more towards advisory, and I think we're focusing at the moment in the UK, especially on advisory around sustainability, partly because of the black hole of regulation on the assurance side. But we're building an advisory service, largely started off with the carbon side of things, but we've got a big focus on human rights as well. So we've got a team within our system. I say a team, it's a very small team, focused on human rights as well. And we are building up that broader sustainability sort of skill set for the advisory piece, but in readiness also for assurance. So we've talked just in terms of transitioning to skills. What I think you said, didn't you, Gareth? Is it accountants or is it sustainability specialists? I think what we're seeing is it's probably both. So again, from an audit firm assurance provider perspective, we're building a team that will do advisory and assurance, and it'll be a mix of people who've got an assurance background and people who've got a sustainability background. And I think it's going to need, in firms like ours, but also in business, collaboration, I think, between accountants and sustainability experts. Somebody said earlier, I can't remember who it was, that it's not about being at opposite ends of the corridor. The finance team, sustainability team are going to have to work much more closely together. And like Caroline, I loved Rosie's comment about it's not a skills gap, it's a knowledge gap. I think that's absolutely key. I think as accountants, the core skills of accountants are still relevant, transferable to just about anything, certainly transferable to sustainability. So you think things like analytical skills, critical thinking, you can develop systems, processes and controls. If you can do that for finance, you can do it for pretty much any aspect of ESG, not just the climate side. And then from an assurance perspective, I remember our global head of audit at GT once saying, audit's audit, right? Doesn't matter what you're auditing, it's audit. So to a certain extent, I agreed with him, and I still do. That assurance is assurance. You need to learn the knowledge gap, fill the knowledge gap rather than the skills piece. And finally, from me, one thing that I hope will happen for audit firms is what I call back to the future. So in the early 90s, when I joined the profession, there were loads of people like me who did geology and all sorts of sciences and history and all sorts of different backgrounds. And over time, the bigger firms have drifted to, and I say this with inverted commas, just recruiting people from accountancy. I'm hoping that sustainability will part of a drive to bring a bit more diversity back into the sorts of people we recruit, so there's more people like me.
Fabulous, thank you, Paul. Actually, that's a really interesting point you make around, I'm actually speaking at an sorry, I'm speaking later today at an event about AI and the role of AI in accountancy, which I suspect is not going to be too dissimilar to some of what we've talked about in sustainability and accountancy. And I'm going to make that exact same point, that the core accountancy skills, and I'm going to talk about analytical skills, about critical thinking, about developing systems, that is as relevant when you're using AI as if you just do normal financial accounting. And so I do see an awful lot of kind of parallels between this new wave of sustainability and the sort of last wave of digital and data. And actually, as we've said, the two, often will actually interlink and interchange. So thanks for that, Paul. So in terms then of the changing skill set, perhaps I can come back to Remy, actually. What are your thoughts on the way that all of this is changing the skill set of accountants?
Yeah, sure. I was thinking earlier when I was talking about what I call the meta challenges. So the things that are maybe a bit different from, say, old school accounting to this type. And I mentioned control versus influence, right? So what's included in the boundaries is a little bit different. But also, I mean, qualitative data. We used to be much more used to the quantitative, and sustainability reporting is inherently also a large part qualitative. So how to form an opinion about what was mentioned by Paul, the tone. How do you grasp the tone of the report, which, by the way, also smarter systems, including AI, might be able to help with. But for us as accountants, we have to come to grips with there is much more qualitative information now. And the last one I said was forward-looking statements. Instead of just looking backwards, we have to become comfortable with giving assurance over a report that has forward-looking statements in it. And that is, of course, a bit odd to us, right? We were trained, I'm just gonna grossly say it, we were trained to look backwards in a way. And now suddenly this comes in, and that asks a different kind of skill set, I guess. Rosie, you had your hand up, so I'll give over to you.
Oh, sorry, I was giving you a thumbs up saying absolutely on forward-looking information. That's the big distinction.
Yeah.
And again, it sounds so different and worrying, but actually, as accountants, we do look at forward-looking information when we look at, cash flow projections for fair values and things like that. So we have done it. I know it's uncomfortable, but I think a lot of this, if the key message I could give is have confidence in the skills, in the way you've been trained. I know that I had a big conversation many years ago where I said I felt when I underwent my accountancy training, I almost felt conditioned to think in a certain way. And I've had to unlearn some of that to get the sustainability stuff in. But definitely overwhelmingly, the skills we have and the ability we have outweighs all of that, I think. But yes, forward-looking versus historic-looking is a critical point, Remy.
Especially in my mind, like estimations, because nowadays, looking at software again, everyone uses a software program to do whatever machine learning they need to give a beautiful outlook to where they're going. But we're going to have to also develop some gut feeling that says, is this actually even possible? Without just saying, yeah, the system told me. Like it has to sort of slowly grow over time, I guess. But it's very doable. It's upskilling.
Yeah, thank you, Rem. And I think that point around, backward looking versus forward looking, I've had a long running debate / argument with one of my colleagues, Nick, about whether financial accounting, which is backward looking, or management accounting, which is more forward looking, is the best. I've always, as a tutor, preferred management accounting because it's looking at the future. It's not just recording what has happened. You can't do anything with what has happened. I was always far more excited about the future and helping guide, budgets, forecasts, looking at the future of a business. So, and actually, if you think about the different, say accountancy awarding bodies, I guess you've got the likes of ICAW and ACCA that perhaps more associated with the financial accounting and the financial reporting process. And maybe you've got CIMA, which is for management accountants, and there's an awful lot more emphasis on budgets and forward looking. So whether we might see CIMA become more relevant in practice firms, which it's never really been in the past. I think that could be an interesting angle, and whether therefore ICAW, ACCA, which and all the institutes, and speaking as an educator, there's a huge amount of introduction of sustainability within the syllabuses, within the qualifications, as was mentioned earlier. The ICAW, their new qualification coming in later this year, is going to have a special sustainability and ethics paper showing how important it is. But all of the qualifications, even AAT at the technician level, they have these kind of golden threads which will include sustainability. They tend to include, technology, ethics, the things that are so fundamental to all finance professionals. So actually, you've got your hand up there, but I'll come to your thoughts on the changing skill set for accountants.
Yeah, thank you. I was going to say that I think that it's all connected, isn't it? We don't prepare a set backwards looking annual reports and then never look at them again. Otherwise, we're going to be reporting the same thing every year. We have to look at what we've reported and make decisions based off of that. And so I remember when my last job, when I was still an accountant, we had a bank of desks that was for sort of year-end reporting, and a bank of desks that was kind of the management accounts. And we would run between those desks all the time, chatting to each other. So they shouldn't sit in isolation. And that importance of management accounting and forward-looking, the budgets and the forecasts, can't be underestimated. And just quickly, I can see Fran's got a hand up. Quickly to mention that IFAC did some research on the skills of accountants needed for sustainability. And they had, I'm just looking, they've got one slide that talks about what might change for accountants. And their key message was a lot of the skills you have are still relevant. But what are the things that might change? And really they're saying it's, okay, so organizational goals and objectives they're not rapidly going to suddenly be something totally different, but they might evolve, they might change. Your capital investment decisions need to be increasingly informed by sustainability considerations. is this climate resilient, etc. How we measure performance. But the key thing I think here is who I work with, who I need to communicate with, and how I communicate. That's where I was saying, I think as accountants, we need to become competent and we need to become versed in sustainability so we can work with these sustainability experts. And then to Remy's point, their third point is data, types of data information, the reporting standards, the assurance standards. That's going to change in relation to sustainability. And lastly, they talk about pressures and challenges, bias and greenwashing risks. And I think Paul was talking about greenwashing, all of that. So I don't think any of that should be shocking to anyone on the call. And none of it's a radical change. All of it's really an evolution. So I think we can talk about this, but IFAC's done some kind of hardcore research, engaging with a lot of stakeholders tells us that these things that are going to change, I really think are easily within accountants' grasps if we just kind of open up our minds and consider that.
Thank you, Rose. And again, I think another parallel with digital technologies and data, where actually an awful lot of the existing accountancy skills that a trained auditor, professional skepticism. I mean, how important is professional skepticism? Whether you're looking at an AI package and the data it's churning out, whether you're looking at sustainability and the numbers that are being reported in accounts. Fran, can I come to you next?
Yeah, very quickly, because I can see Jessica's put a hand up as well. IFAC have just produced a really good resource actually to help SMEs do a ESG analysis for themselves. That's worth looking up. What I wanted to say really in the sort of skills for accountants is that currently, we've talked about financial accountants looking backwards, management accountants looking forwards. Absolutely agree with that. You've got specialists that are tax accountants. And I think what we're going to see coming, and I think it's already happening in Australia and New Zealand perhaps, is that there are going to be specialist sustainability accountants that can talk that language. So you kind of need all those specialisms within a practice or within an organisation. And as Rosie says, all talking to each other is so important, not working in silos, and skill sharing and knowledge sharing as well. But I say triple bottom line accounting. The triple bottom line, I'm sure you're aware of, as an accounting term. Initially, John Elkington talked about people, planet and profit. We talk about people, planet and prosperity, because a huge chunk of our profit goes into training our employees, our colleagues, so that they are ready for this new world. And I think if you looked at our profit and loss sheet, balance sheets, etc., you'd probably be shocked how much we spend of our turnover we actually spend on training. And there is now so much out there for people to do within the accountancy world. So we've talked about the certificates. We've got senior accountants that have done the ICAEW certificate. Didn't realise that was you, Rosie. It was. I know that it was well received. We've got another one that's done the ACCA. We've got people that will now move on to the new CPD, and that's really what I wanted to talk about as quickly as I can, because I come from a school teaching background, and 15-20 years ago we were embedding PHSE into the curriculum. Now all schools are required in the UK to embed climate change into the curriculum. And these young people are then going to go to university, where they're going to find it's embedded into their university degree. And of course, we've got the accountancy qualifications now embedding sustainability and creating new sustainability and ethics modules as well. And I've mentioned, I was talking to you, wasn't I, Gareth, about the fact that ethics is something that we all have some moral code for, but sustainability, with all its unnecessary acronyms, etc., is not something that accountants or any profession comes naturally to the table with. And so it does require learning, it does require education to get there. And I was so pleased to hear Rosie and I think it was Caroline both saying we've been lobbying for compulsory CPD for years. okay, and we've written stuff for council members of the professional bodies to take to council on this, and it's music to my ears, because we're going to have these young people coming into the profession, and they're going to be talking to you know, the owner of the practice or the organisation, who's just saying, that's not accountancy, that's not got anything to do with me, because they haven't had the CPD. So
Yeah.
I seriously believe compulsory CPD to keep your practicing certificate is essential.
Fantastic. Thank you so much, Fran. And can I turn for the last word to Jess to round off this morning's webinar, or this evening for you, Jess?
This evening's. Yeah, I think I like to go, you know, for context, 2 years ago, we were running an accounting firm, and I think over a quarter of our revenue came from carbon accounting or sustainability services. And I think what's really important is often the courses that are released, whether it's industry bodies or, you know, the work of the reporting industry bodies, they are fantastic for that general high level knowledge of what are we doing here? What are we talking about? Why do we have a role? And we can talk about skills of like, oh, we can think critically, we look forwards, look backwards, we can do these things. But if you're looking to commercialize or productize a service here and sell the service, it's just really important to look at actually practically what skills do these 4 people on my team need to have to deliver this work to the standard our firm expects, and for that to be profitable. And I do think there's a difference between those kind of layers of education. One thing that we really focus on is, okay, say a client's walked through the door and said, can you deliver our baseline, please, and help us interpret that and identify, you know, the top 2 business cases that would help us reduce emissions. They're specific skills where we can talk very high level about what's great about accountants, but there are also skills or education we need in what are the standards say currently? What are the methodologies under the standards? Where does that data generally come from? How does that get pulled together? What should my disclosures look like? How am I going to report that? And getting into the nitty gritty and providing the team with an opportunity to get into the nitty gritty and making time for that, I think is just so important. And then that the rest of the, I guess, awareness building around sustainability more broadly, the standards coming in, how that's changing it, that's constant learning that we can all get. But I do think you need to do a deep dive if you're going to be offering this as a service that you charge for on the very practical side of that education, which is very much, yeah, what we focus on.
Fantastic. Excellent place to finish there, bang on 10 o'clock UK time. So what a fascinating 90 minutes, actually. I think that's been an excellent discussion across a range of topics. So thanks so much to Jess, to Caroline, to Paul, to Rosie, to Fran, and to Remy for their insight. Thanks to the audience. We've had plenty of chit chat going through the chat box. I hope that has been really interesting and illuminating, and I'm sure the first of many of these sorts of discussions. So thanks everyone for joining us. Enjoy the rest of your day and your week.